This is a debrief of Task 5 of Applied Management Accounting Practice Assessment 2. So in Part A, it asks us to identify whether the following statements are true or false in relation to short-term and long-term decision-making. So the first one, relevant costs are only considered in long-term decisions. Well, that answer is false because really when we're talking about our relevant costing, we're focusing on short-term here. In the long term, we might want to consider other costs because we want to look at the bigger picture in the long term. The second statement, cash flows are less certain in long-term decisions. Well, yeah, that's true because it's difficult for us to predict into the future what's going to be happening. So the further in the future we look, the more uncertainty we have. Next, significant capital investment is required in long-term decisions. So that in general is quite true as well, isn't it? Because if we're thinking about in the long term, it's quite likely that we have to think about how we're going to be funding some of those decisions. And then there is no risk with short-term decisions. Well, that's false, isn't it? There's always going to be risk, whether it's short or long-term. Then in Part B, complete the following statement about short-term decision-making. So we're making short-term decisions, you should. Now the key here, this is all about the idea of relevant costing. So remember, a relevant cost is a future incremental cash flow. And that's basically what this question is all about. We're thinking about future costs and revenues. They need to be incremental and they need to be cash flows. So let's understand what this is all about. Let's revise this topic. So we're trying to make a decision in the short term, should we do something or not? Well, we only want to think about future costs and future revenues because if we've spent some money on that already, well, that's happened. Yeah, and the idea of this short-term decision making, we don't want anything that we've done in the past to influence our future decisions. Because let's suppose we've spent £1,000 on doing something already and we're thinking now, shall we carry on with this project? But if it's a really bad project, we should stop it. We shouldn't keep on thinking, well, if we stop now, we won't make any money, so we won't be able to pay for the £1,000 we've spent in the past. But actually, that's the right thing, because if this project is just a bad project, we should stop it. Okay, so we've spent that £1,000 in the past already, but we just need to just write that off, rather than carrying on with a bad project. So yeah, anything that we spent so far, we should ignore. And then the next one is incremental. Well, yes, the decision should be based on incremental cash flows. In other words, cash flows that will occur as a result of this decision. Because if we're going to spend the money anyway, then we shouldn't care about that. So for example, yeah, my job, I'm a tutor, I help people pass their exams. And let's suppose that you come to me on a Saturday and say, well, please could I have a tutorial and I'll pay you £10. Now let's be clear, that £10 wouldn't be enough to cover my cost for 1 hour. So should I do it? Well, for me, I'm salaried, which means that I am paid the same amount each month, whether I give tutorials or not. So if somebody comes to me and says, look, I would like a tutorial on a Saturday and I'm going to pay you £10, well, that is an incremental cash flow, because if I agree to do the tutorial, I will earn £10. And if I don't agree to it, then I won't earn £10. Yeah, that the decision is generating that £10. So it is an incremental cash flow. And should I agree to do that or not? Well, my salary is not incremental. I have to be paid that salary whether I do give the tutorial or not. So basically my decision is, if I give the tutorial, that £10 will help to pay my salary. If I don't give the tutorial, I earn nothing. So I should agree to give the tutorial to help me earn that £10 to help pay my salary. Now, if I were paid overtime for doing a tutorial on a Saturday, that would be a different matter. But on the basis that I have a fixed salary, then that cash flow would cover the zero additional cost. And then the next point, we need to focus on our cash flows because that is a figure that is non-judgmental. If we include other figures that aren't necessarily factual, then potentially we may be making the wrong decision. At the end of the day, we need to make sure that when we make a decision, it will generate more cash coming in than cash going out. And that's going to be a good decision for the business. So just try to remember that relevant costs are future incremental cash flows. Now we can apply that in the next part of the question. It tells us that F Limited currently buys in one of its biggest selling products, but is considering whether it'd be cheaper to make the product itself. The cost of buying in the product from the external supplier is £12 per unit. And at the moment, we would like to make and sell 21,000 units each year. So we've identified that the manufacturing costs are as follows. We've got materials, direct labour, supervisor and factory. So remember that relevant cash flows are future incremental cash flows. So we need to apply that for each of these different types of cost. So for our materials, if we're going to sell one more product, that means we will need to buy materials for that product. So that means that the material expense is incremental to making that decision. And for materials, we're going to have to spend £2 per kilogram. So that is a cash flow. And it's also going to be a future cash flow, isn't it? Because if we sell one thing in the future, we have to buy the materials for it. The same applies for the direct labour as well. If we're going to make one more product, we will have to pay somebody to make it. So we're going to do that in the future. We have to pay them in cash, and we'd only pay them if they're going to make it. So yes, that is incremental. What about our supervisor? So it tells us that we have existing production supervisors who would spend 10% of their time on the new product. But the issue here is that we are paying them anyway. They're supervising what's going in the factory. So if we're paying them anyway, we may pay them in cash and we may pay them in the future, but it's not incremental to this decision. If we pay the supervisor anyway, then it's no longer relevant. And then for our factory rent, it tells us that we would need some extra factory space to be able to make this product. So we're going to have to rent out that factory in the future. We'd only do that if we make that product, so it means it's incremental, and we would pay cash for that. So that means of these four, only the supervisor is not relevant, whereas the other three are relevant costs. For part D of the question, we need to calculate the estimated cost for those four things in terms of our relevant costs. So we've identified, haven't we, that our supervisor is not relevant, and therefore we should put a 0 in for the supervisor. Notice the question says we want our answers to the nearest whole pound, and it tells us put a 0 if that's what we want. So remember, pay attention to these instructions, because a computer is marking this, and the computer will not be able to differentiate between a whole pound or decimal places, and it will just give you an incorrect answer. So let's go back then. So it's asking for our total manufacturing cost, isn't it? It doesn't want the cost per unit, so you do need to read very carefully. And so that makes our life a little bit easier, doesn't it? For the factory rent, we just had a figure of 31,500, so we can put that straight into our answer. But what about for our materials and our labour? So let's go back to the table here. So remember, we want to make 21,000 units. So it tells us that each unit requires 2 kilograms. So let's do our working here to show what's going on. So we have our 21,000 units and we multiply by 2 kilograms. That means we need 42,000 kilograms. Notice in my workings I'm using units and kilograms there because we can see that when people are not doing that, they just have a page filled with numbers and it can be a bit confusing. But if you clarify what exactly the units are, it can help you to follow your own workings. Now it tells us that our main supplier can only supply 20,000 of these. So for 20,000 kilograms, we're going to pay £2 per kilogram. So that's going to be a total cost of £40,000. But for the other 22,000 kilograms, we'd have to go to a different supplier who would pay £3 per kilogram for that. And that's going to cost us £66,000. So that giving us a total of £106,000. So we can put that into our answer. Okay, materials will cost 106,000. And then what about our labour? So we've got our 21,000 units that we want to make. It tells us that it spends 15 minutes. So yeah, we want to spend 15 out of 60 minutes to make that. So we'll need 5,250 hours to satisfy our production, and we're going to pay £12 an hour, aren't we? So multiplied by 12 gives us a total cost of £63,000. So we can put that into our answer. So in the table, the total will be calculated by the exam software. So we get a total cost of 200,500. And then for part E of the question, we've got some knowledge questions about linear programming. So what are the assumptions for linear programming? So remember, the idea of linear programming is that we will want to work out our cost behavior, and we can express those costs as lines. So we might have a particular cost that behaves like this. We may have another one that behaves like that, for example. And we were going to be thinking about different constraints. So we're looking at, if we make a particular product, for example, we could use one constraint or another constraint, and that's going to allow us to plot those lines. And then we'll also have some sort of target that we want to achieve, which will be our objective function. So that could be profit or contribution or whatever it is. And then based on that target, we'll be able to work out what would be the best way of manufacturing our product. So it's either going to be, that could be our production plan, or that could be our production plan, or that could be our production plan. So just depending on what our objective function is, we'll identify which will be the best production plan. So that's the very quick recap of that. Again, we don't really have time in this video to go through that in the huge amount of detail. So let's look at these assumptions. So linear programming allows for multiple objectives. Well, no, that's false. We have one objective, and that's going to be the single line that we have on our graph here. If we had more than one line, then it means that we might have different ideal production plans. So no, we can only have one objective. Next, each product always uses the same quantity of the scarce resource per unit in linear programming. Well, yeah, that answer is true, because the focus here is on the resource per unit, and because we want to have straight lines. It's going to be difficult for us to work anything out if we have curves here. So yeah, with a straight line, it means that we're going to have a fixed resource per unit. Next, linear programming can only be used in situations where there's just one scarce resource. Well, no, that answer is false. Okay, we're going to have two scarce resources, or potentially more than that as well, and that's going to allow us to work out those lines. So yeah, that's the whole point of linear programming, really, is to deal with situations where there's more than one scarce resource. Next, the contribution per unit is constant. So yeah, that's true, because again, we need to have a straight line for our objective function as well. If we had a variable contribution per unit, then that would be a curve. Okay, so yeah, we do need to have a constant contribution per unit, or a constant profit per unit, if that's what we're using for our objective. And finally, linear programming ignores fixed costs. So yeah, that answer is also true. Yeah, we do ignore fixed costs in our straight lines here.